I'm glad you have tuned in. This will be the last Friday show. I'm going to have next Friday off. It's going to be Christmas. And I think the next Friday after that is going to be New Year's. So I will have that show. It will be a year in review of what has been going on with the local market, my projections of 2021, and also just showcasing some of the things that I've been working on. So looking forward to that. It's going to be pretty exciting to share with you guys what I've been up to, and we can proceed from there. So there's a lot of pretty big headline articles for this week that I want to go over, and but from a personal perspective, yeah, things have been very interesting. I had a client that finally moved in. Really appreciate your patience on this. It was a new home builder, delayed I think for almost a month. But they finally got to move in, and I'm really excited for them. They're going to enjoy their brand new home in Newark, listed, I think, or at price around $1.3, $1.4 million. Has a nice in-law unit on the bottom level. But really appreciate your patience on that. Just really happy for you guys. At the same time, made an offer today. Crazy going on in kind of the Oakland, Berkeley area. Just very, very competitive. But we still have a pretty good chance. So cross our fingers. Hopefully we'll get it by sometime later today. All right, let's talk about the news itself. All right, so biggest headline article, and I didn't cover it last week. I didn't pull the data in time or the information in time, but here's another big move. Oracle to move headquarters from California to Austin, and latest loss for Silicon Valley. It's going to be hard to see. So number one, when you look at the impact, you may be saying, wow, Oracle's so big, we're going to lose so many people. But I think it's very important to understand, once again, don't always look at the headline articles, understand a little bit about, what is, how is Oracle actually set up today? So they do have a lot of square feet here, but it's also to understand that they already opened up its Austin campus in 2008 and said it would eventually house 10,000 employees. So they've always had a huge presence out in Texas, in Austin. For those that live in Austin or are familiar with Austin, they do have a lot of these companies that have already been there. It's been a big kind of hub for them. So while it's a very big move, you're going to see a lot of other things that will happen. But at the same time, a lot of things will stay here. And what I mean by that is a lot of the technical work, they're not forcing people to relocate to Austin if you work here today. They're still going to have their campuses. Now, over time, they may shrink on that. Over time, they may continue to move different people over. However, it is important to understand they haven't moved anything just yet. However, it is a big sign that the Bay Area market, when it comes to, not Bay Area market, but when it comes to California as a state, they need to kind of get their act together. Otherwise, we will continue to see a lot of these continue to move forward. I'm going to make a pretty bold prediction. My prediction as to the next big tech company that may move out is Cisco. Mark my words, that's my bet. So I'm going to make a bet. I think Cisco may be the next to move out. I think it'll be a really big move. I'm not 100% sure, but judging from kind of what they've been doing and how they've been viewing their corporate real estate strategy, that's my bet. So we'll see what happens. Hopefully they don't, because they have a big campus right next to me, but they've been trimming their corporate real estate footprint for a long time. I wouldn't be too surprised. At the same time, a lot of this is from a corporate structure perspective. They're going to have less taxes there. And sure, maybe people can argue about recruitment, but it is also important to understand, while Oracle is a great company, it's a large company, if you ask the recruiters, it's not as popular of a destination like most of the other big tech companies. Think about Amazon, think about Facebook, think about Google, these companies. So it's important to understand who is leaving is generally the ones that are just not doing as well. Take a look at their finances, see for yourself. Their growth and their bottom line have not been that impressive. So if you can't grow the top line, you cut costs, and this is a clear way to do that. So just something to be mindful of. And here's another point that would kind of allude to what I just mentioned. Amazon spends $200 million for San Francisco site, one slated for housing. So they plan to build a delivery station at a site here, which is kind of interesting, right? To build a delivery station in San Francisco at this time, spending $200 million for it. So clearly, it's not always the case that that all these other companies are quote unquote fleeing. So you can see, like I said, the big tech companies are continuing to be very aggressive in terms of expanding their footprints in the Bay Area. So keep that in mind. See how they're spending the money. That's the most important thing. Next, Presidio Bay to remake Peninsula Honda dealership into life sciences building. So this is also another interesting thing. I think across the board, we will see a change that some of the older companies will likely continue to leave, or at least move their corporate headquarters location. Doesn't mean they're leaving per se, but at least they're going to announce the move, and they have less people here. But I think on the biotech front, it's just going to be an incredible boom, and you will see that. And the main issue is, if you think about the biotech space, the facilities are very, very different than traditional office space. So it's going to be interesting for them to repurpose a lot of things. The question is, will they repurpose office space, which I think is very expensive and very difficult, or will they just convert space into other things? And I think that's going to be the likely outcome, because there's a lot of things that are just not doing as well, like car dealerships. They're not going to be doing as well. There are maybe different other types of maybe more traditional kind of buildings that they may want to tear down and redo. So I think there's going to be a lot of interesting things that will be redeveloping into life sciences buildings, because that space has done phenomenal, and it's something that most people do not understand. Mike, thank you for your comment. Yeah, I mean, I think at the end of the day, I hope the politicians will get their stuff together, but you never know, right? It's hard to say. At the same time, as I mentioned previously, it really just depends on which are the companies, who gets paid the most, and how are they looking at their corporate real estate footprint. There was one that I don't actually have here that I'll make a quick comment on, which is Google. So Google had also extended their work from home policy to September. But why do you think they haven't done it indefinitely? It's important to understand that. Look at that report. I need to pull it up sometime in the future. They want people to come back in the office. It's very, very clear. And it goes back with how they're developing their corporate real estate portfolio, how they have named, how they have never officially say, quote unquote, people can work from home indefinitely. You haven't seen those kind of articles, because they want people to come back sooner than later. So there's clear value add that a lot of these companies have. And I agree, you're going to lose a lot of the collaboration, the innovation, just the randomness of meeting people and collaborating. So something just to be mindful of. So I get this all the time, and I've made my blogs and my posts about this, but everybody says, hey, look, Bay Area market is so hot, or there's some exodus. I think the real hot markets are not the Bay Area right now. The Bay Area is competitive. Make no mistake. It's still a very intense market. You're certainly not the only buyer. Let's not kid ourselves there. At the same time, quote unquote, secondary markets, places a little bit further out that people didn't consider before, are some of the hottest markets today and some of the most competitive. For example, everybody knows, wow, it would be amazing to live in Lake Tahoe. You're about 4 hours away, but the lifestyle that you have, if you don't really have to go to the office at all, be incredible. So what does that mean? It means Lake Tahoe, I saw this number. In general, there's Lake Tahoe took #1 spot this year, as median views per listings went up 280% year over year. Incredible. Now, what is the price increase? Medium sale price from the same time last year, 28% increase. It's actually the biggest increase that's just been actually through, I would say, April. So while I was comparing year over year, if you just compare to April, this is probably somewhat of the same result. So it's actually more of like 9 months, 28% increase in medium sale price in Lake Tahoe. So gives you an idea, like Lake Tahoe, really intense. Sacramento, same thing, one of the hottest markets, very intense. Those are the truly intense markets. don't complain about the Bay Area real estate. Bay Area real estate did not go up 28% in less than a year. Let's look at the facts there. So it's all important to understand from perspectives. Now, did it increase? Yes, we'll go over that momentarily. You can see for yourself. Did it decrease? No, not so much. But other areas have been a huge benefactor of the people that have decided to leave the Bay Area. Or keep in mind, these could be secondary houses. So when it comes to those markets, if they're buying vacation homes, secondary homes, it's something important to understand the mentality there. Hence why it's a lot more feverish, because if you're buying a secondary home, you're not trying to shop around every week, right? It's not your primary. So you'll be a lot more aggressive to just get the deal done. So just something to be mindful of when it comes to if you're trying to buy a secondary house in those areas. I have fantastic realtor partners in Tahoe, in Reno, in Sacramento. So if you do decide to go there, reach out to me. Happy to introduce you to my contacts. They'll take care of you. All right, next is about just general things. 2021 will be the year of the tech-enabled agent. Fortunately, I'm the tech realtor of the Bay Area, so I've been way ahead of all these things. But as you can see, I think this will continue to play forward. And it goes in different things. I look at myself and I look at this perspective of being much more process-oriented, much more analytical, hence why I go over all this data and give you my thoughts, but also very strategic in terms of negotiations, strategic in terms of what is actually happening in the news, but also what's more important, what is the story under the headline articles, hence why I do this report every week. But at the same time, I continue to leverage technology to help clients, but also I will share, hey, look, if this technology is going to be beneficial for an individual, then go ahead and use it. I'm not biased towards one platform or the other. It just really depends on the individual and if it will help them ultimately with their home buying process or the home selling process. Next, Fed will keep interest rates low until economy recovers. We'll keep aggressively purchasing treasuries and mortgage-backed securities until employment and inflation rise. So it continues to show likely we will continue to probably have rates at pretty low levels. What does that mean? If rates are at low levels or continue to be at even lower levels, get ready for a really, really interesting 2021. I've seen articles and I've seen the data. Keep in mind how much money has been pumped into the economy. Way more money has been pushed in this time around than even in the last correction. So for those that are hoping for certainty, I'm happy to wait. I'm happy to be there whenever you're ready. And we can obviously search then. But keep it in mind, when there's certainty, there will be a price to pay for that certainty. So if everything is truly that good and things truly get way better, don't be surprised if things get way more expensive, especially with how much stimulus has been pumped in. So it's going to be really interesting to see. My bet, we're going to have a roaring economy. I think things will go pretty crazy in 2021, and I will show you that just from the data in usually a slower season in winter, but this time around, very different. So a lot of people that I work with, my opinion, pretty smart people, are trying to get ahead of things. Interest rates are really low. They work in tech. Tech, quite frankly, is doing phenomenal, all-time records, IPOs all over the place. So they have a very different, perspective, right? Because their job is secure, or they're very secure. They make more money than they ever made before, leveraging the record low interest rates that we have, beating the fact that people will likely go back to the office. Something just to be mindful of, and I tell everyone. But at the same time, everybody has their own opinion. So that's why I'm here, to provide the information. So last but not least, mortgage applications rebound as mortgage rates drop. Refinances obviously has been crazy. If you have a 4 in front of your mortgage, refinance it. Contact me. Happy to introduce you to different lenders. Refinance that. People are getting into 2s these days, 2s if not 3s. So something just be mindful of. Mortgage applications are high. The biggest challenge I think moving forward is we're going to take a look now is all about inventory. The question is going to be, well, just because there's a lot of buyers, is there any homes for people to buy? Hence why new construction is going incredibly fast, because there's also a combination of the demographic of those buying a new construction is one thing, but at the same time, there's just so few properties for people to even get. So take a look at San Mateo County, right? 67 new listings this week. That is a third of what it was in previous times. So at the same time, look at contingent pending. It's still a pretty high number, 121. I suspect next week will be probably about the same levels. I think there's a good amount still this week. This will be probably the last weekend of intense showings. Pretty much my weekends are fully booked from literally 9 a.m. to 5 p.m. Saturday, Sunday. So it's still very busy. There are still properties to go see. You never know when the right property you like is available. So keep that in mind. Price-wise though, increased since October, November. Not as high as it was in August, September, but still higher than it was before. So we're not seeing a continued decline. However, condos, townhomes, a little bit different story. As you can see, it's been relatively still flat if you compare it from January. If you compare it from the high of, let's say, April, it has declined in San Mateo County. Santa Clara County, 225 new listings. That is about 40% less, but it's still better than San Mateo County. Contingent pending, 310. Much bigger imbalance than most. Take a look at prices. Prices in December have dropped a little bit since November. Keep in mind, though, November was a record time. It has never been higher in history. So keep that in mind for single-family houses. But it's still, as you can see, kind of what it was in October, what it was in August. So it's been relatively flat, somewhat predictable what things will go for. But take a look at this. Condos and townhomes, different story, continues to increase. So a lot of people have decided to move into a condo and townhome. This is a little bit different than what you saw in San Mateo County. Keep in mind as well, Santa Clara condos and townhomes tend to be newer than San Mateo County, a little bit more space. So those are things just to keep in mind. Next, Alameda County. Alameda County is very competitive these days. I made a bid. So give you an example. Hopefully we are the winners today. We'll find out. A property came back on the market yesterday because the buyer couldn't perform. So it was on the market yesterday. Fortunately, we went to go see it same day as soon as it dropped out. That same day, received 3 offers, and we're all kind of in contention. So things move fast, especially keep in mind, if anything is reviewed as they come, or they are maybe allowing preemptive offers, use that as a sign that they are potentially, it may be gone before the weekend. So think of that as a strategy. Be sure you're working with that with your agent. Obviously, if you're working with me, let me know it in advance as soon as you see a property. And that way I can do the investigation. I can make the calls to see if they're willing to take early offers. If they are, don't be surprised. It may not leave for the weekend. But as you can see, generally prices have continued to increase. Pretty sizable amount. I think about 10%. If you compare it to maybe in January, it's even higher, maybe 20%. So Alameda County has done very, very well during this time. Condos, townhomes, relatively flat. Nothing too crazy to report there. Contra Costa County has cooled down a little bit. So Contra Costa County has been one of the most intense markets initially. As you can see in May, it was maybe the average was about 820 or so. And then now we've kind of dropped about 950, which is still a pretty good increase, a little bit more than other areas, but it's kind of slowly started to cool down a bit. I would say prices have been selling for relatively about the same levels as it has been for the last several months. So there's not too many surprises right now. And the same with condos, townhomes, been relatively flat. Nothing too exciting there. So hopefully you had a good idea of what is happening with the local Bay Area market. As I mentioned, I go over what things I do personally, some of the things that are happening from a headline article that I wanted to cover. At the same time, I extract the data, and you can actually get this data if you follow me on YouTube. You can see it in the links below, and you can actually see for yourself the actual raw numbers. It's all public that I do typically every week. Next weekend, we will not have a show, but I wanted to wish you all a good weekend. I know we have the lockdown in place. Wanted to also wish you guys a happy holidays. And thank you so much for tuning in for, man, it's been almost 9 months of this every single week on Fridays. And of course, if you or anyone you know is considering to buy, sell, or invest in the Bay Area, I would love to get introduced. It's never too early to figure out the game plan, especially right now to plan for 2021. it's probably always better to get in front of things than to be behind it. All right, my forecast, given what you see here, and given the money that in the vaccines being rolled out, I think 2021 is going to be a very, very busy year. But of course, you'll be the judge. All right, well, see you at the next one. Bye now.